Hey guys, welcome back to the channel. It's me, Adam, and you are watching Unlimited Options Investing. In this video, we're going to be talking about my top 3 picks for August 2022 in terms of dividend stocks. Let's get started. Alright, so the first pick easily is a Microsoft, well off its all-time high. It holds a market cap of $2.1 trillion, and I know the dividend yield is only 0.88% annually. However, Microsoft more than makes it up with their pristine business. It does not matter what's happening in the macro. Of course, it does to an extent, but I mean, we could be in a recession, we could have inflation, whatever's happening. Companies and businesses still need their enterprise software to operate. Windows OEM is a staple, and not to mention their cloud business, Microsoft Azure, and they are just a cash flowing machine. So although the yield may be only 0.88%, at the same time you're getting stability, you're getting growth, and you're getting a dividend that is growing year over year, and usually Microsoft does that at about 10% a year, so it's like getting a 10% raise at your job. And really tell me with certainty how many people around you do you know that gets a 10% raise year over year. That's what it's like holding Microsoft stock. And although Microsoft missed on their estimates, the stock was still up 5% after hours last Tuesday when the earnings came out. And that's because the way things were priced in, we were expecting much worse, and things weren't as bad as expected. Now, don't get me wrong, they weren't as great as we wanted them to be, but just given everything that's been going on in the macro, Microsoft will obviously feel the effects, but at the same time, the company will still continue to grow and can still continue to do very, very well despite what's been going on. And this is just icing on the cake. I don't know if this deal is actually going to close, but they did agree with Activision Blizzard to purchase them for $68.8 billion, which would put the stock price between $85 to $90 here or there if it does close, which is a way that you could also buy Activision Blizzard. I think the purchase of this company would do wonders for their business and gaming long term, but just seeing them eat up and acquire this company will do wonders in my opinion. So the second stock on the list, we have simply Costco Wholesale, a dividend yield of 0.67%, but at the same time, if you look at a 5-year chart, you're looking at a 246% return over the past 5 years, and they're similar to Microsoft, where they're a growth company, but at the same time, they're also very stable in their businesses, and their cash flows are very predictable. Their business models are very predictable. And again, the whole thing with Costco is they make pretty much 100% margins on their memberships, right? And that's just such an easy business model. So the items they sell, they actually take a loss on a lot of them. I mean, they make some profit on some of them, especially on items that are Kirkland brand because it costs them less to produce them. But one way they can battle their inflationary pressures over the long term is by increasing not the hot dog, but the cost of their membership. And again, just the amount that people love Costco and need to shop there. And we all know what happens when you go into Costco. You go in for one thing and then you're spending $100 to probably like $200-300. We've all been there. Let's be real. So if Costco does subtly increase their membership costs over the span of a few years, I mean, customers, I think, are going to be more than willing to want to pay it in order to get their access at their $1.50 hot dog. This is a company, in my opinion, you just buy on dips. They're just so predictable like Microsoft. And lastly, I've got to do it, VIG ETF. And again, if you can't pick just one stock, you can't go wrong buying VIG. Over the past 1 year, it is down 3.8%. But in my opinion, they just have so many companies that are similar to Microsoft and Costco. Companies in this ETF are well established as they're growing their dividend year over year. And don't get me wrong, Microsoft is well off its all-time high at 16%, and Costco is down 4.48% over the year. So VIG being down only 3.8%, it is more stable. But in my opinion, when stocks do start recovering, I think VIG will do very, very well, even though it is diversified. The companies that we'll see in a moment are very, very, very high quality. And I have talked about this ETF a lot on my channel. You have top names like UNH, Johnson & Johnson, you have Microsoft, Procter & Gamble, JPM, Visa, Home Depot, MasterCard, Coca-Cola, Pepsi. You got Costco, Broadcom, Abbott Laboratories, and McDonald's, Cisco, Comcast, Walmart, NextEra Energy. This again being a low-cost Vanguard ETF with an expense ratio of 0.06%, so $6 every $10,000 invested. So let's take a look at the technical analysis. So on the daily time frame of Microsoft. So again, we hit its all-time high back on November 22nd of 2021. And since then, it has been a rough ride down. However, just after earnings, we had a very nice 3-day rally where we jumped up from $250 all the way up to $280. So literally a $30 move in just 3 trading days. We're currently at an area that we could see some selling pressure. We've had consolidation before in these areas back in April, as well as March, as well as last year in October, and as well in August. So a lot of consolidation in these areas. If we do break through 280, the next level would be around 295, 300. Back above our 200 simple moving day average, which Apple is now above, but Microsoft, the second biggest stock in the stock market, is still below its 200 simple moving day average. And if we also look at the weekly time frame, we're pushing right up against the 50 exponential moving average. So a lot of resistance, a lot of key areas. Next up, we have Costco stocks. So we saw a lot of volatility. We reached a peak back in April of this year, and we just kind of fell right off a cliff below that 200 simple moving day average to just above $400, and since then we have been seeing higher lows and higher highs right back above that 200 simple moving day average and above all 3 averages really, the 20 exponential and the 50 exponential. If we take a look at the weekly time frame, we fell below the 50 and then we've been rallying ever since, and we could draw a line connecting these 3 areas over here, and it makes sense that we found buyers right on that trend line. And lastly, we have the VIG ETF. So we saw the peak back in January of this year, similar to the S&P 500. Since then, it has been a pretty rough ride down, going from $173 to the lows of $138. But again, the market has been very, very volatile. And recently, over the past month and a half, like most of the market, we've been seeing higher lows and higher highs. Again, at a very key area of about 150 to 155, where we saw previous resistance back in June, as well as support in March of this year, in September, October of last year, and again, a lot of consolidation in the summer of last year, in June, as well as May. And if we're able to breach this area, the next level of resistance will be at about 158, 160 at that 200 simple moving day average. If we take a look at the weekly time frame, we didn't quite hit that 200 simple moving day average. However, we don't necessarily need to touch it or even go below it the same way we did back over here. As in 2018, we didn't have to necessarily touch it, and then we recovered from that area later on, even though we made lower lows afterward, but again, besides the point. So those are my picks for August of 2022 for dividend stocks. Let me know in the comments below, what are your thoughts? Are you buying any dividend stocks? Let me know. As always, subscribe, like, and check out my description below for links to my Instagram, my Twitter, and my TikTok. I will see you in my next video.